This is the exact setup that I use every single day to generate over 20k a month. Most traders lose money not because they lack discipline, but because they make trading way too complicated. Too many indicators, too much overthinking, and none of it works. Simplicity does. So in this video I'll break down my highly effective and profitable trading strategy step by step so you can copy it and apply it for your trading sessions and finally start seeing consistent profits. This could be the game changer in your trading journey. Imagine this: the digital clock tick over 1:30 UTC, the New Year's session burst open like a volcano erupting in the crypto markets. Bitcoin surged, Ethereum danced wildly, and altcoins like Solana flip-flop in a frenzy of green and red candles. Amid this chaos, a savvy trader sits poised, not chasing moonshots or holding for dear life, but sniping tiny, consistent profits like a digital sniper in the shadows. This, my friends, is scalping, the art of quick and precise strikes in the volatile world of cryptocurrency trading. Have you ever wondered why so many traders blow up their accounts chasing big wins while a select few quietly amass fortunes through small and repeated victories? Scalping answers that question. Scalping is a strategy born from the raw energy of financial markets, evolving from the dusty trading pits of the 19th century to the lightning fast digital exchanges of today. Historically, scalping traces its roots to the early commodity exchanges in Chicago around the 18th century, where floor traders, those greedy individuals shorting orders in crowded pits, exploited minuscule price discrepancies in gains and livestock. They scalped tiny profits by buying low and selling high in seconds, much like Native American warriors said to scalp enemies for trophies. Through the trading term likely derives from the idea of skimming the top layer of profits. By the 20th century, it migrated to stock markets with the advent of electronic trading in the 1970s, allowing faster executions. In crypto, scalping exploded when Bitcoin raised in 2009, amplified by 24/7 markets and extreme volatility. Just think about the 2017 bull run, where scalpers rode microwaves in Bitcoin swings, turning $1,000 into tens of thousands, even hundreds of thousands of dollars without ever holding overnight. I once interviewed a trader who started scalping crypto during the 2021 DeFi boom, and he recounted a day when Ethereum spiked on news of a major upgrade. He entered and exited more than 50 trades in hours, netting 5k in tiny bites while others got wrecked on leverage. It's like fishing in a storm, he said. You can cast quick lines for small fish, not waiting for the whale that might drag you underwater. And I have to say that this is so smart. This mindset shift is crucial for your channel. So in this video we'll dive into scaling tailored for crypto, defining it, setting conditions, mastering the first candle rule, executing multi-frame strategies, managing risk with math that works, and pro tips to elevate your game. Are you tired of watching your portfolio bleed in sideways markets? Scalping empowers you to thrive in any condition, provided you follow the rules. But first, a quick heads up. In the description below you can grab my full trading course for free. Just register in Bluffing, deposit $100 and it's yours instantly. Then test these strategies live on their platform with low fees and killer leverage. Links waiting in the description, so don't miss it now. Now let's dive into what scalping is. As I've said, scalping in crypto trading is the high-octane strategy where you can capitalize at tiny price fluctuations, entering and exiting trades in mere minutes or even seconds to accumulate small but frequent profits. Unlike holding positions for hours and days, scalping is all about speed. Think of it as a sprinting through the market's twists and turns rather than a marathon running. In crypto, with its perpetual motion and wild swings, scalpers target assets like Bitcoin or Ethereum on exchanges such as Bluffing, using leverage to amplify those micro moves. But here's the key distinction. If a trade lasts more than 15 minutes, it's veering into a day trading territory. Day trading allows for broader swings and more analysis time, often holding through minor pullbacks. Scalping, however, demands trades under 15 minutes. It's ruthless, requiring you to cut losses instantly if the move doesn't materialize. To build a mental model, forget about swinging for the fences with home run trades that promise 10x gains, but often ending wipeouts. Scalping is about base hits, consistent, modest wins that compound over and over the time. Imagine a baseball player who doesn't aim for grand slams but racks up singles and doubles. By game's end, they've scored just as much, if not more, with far less risk. In crypto, this means aiming for a 0.2% to 0.5% executed 20 or 20 times per day, rather than getting the farm on a single pump. The mindset and skill set for scalping are forged in fire. You need a lightning fast decision making honed by hours of screen time, where hesitation costs money. Clean setups are non-negotiable, no messy charts clustered with indicators. Focus on price action purity. Execution trumps prediction. Instead of guessing where the market goes next, react what it's doing now. Historically, this echoes the floor traders of the 1920s on New York Stock Exchange, who scalped pennies on blue chip stocks amid the roaring 20s volatility, surviving the 1929 crash by staying nimble. In crypto, during the 2022 bear market, scalpers thrived on a Bitcoin intraday bounces while holders suffered. So scalping shines in ideal environments, highly volatile and liquid cryptos. Without volatility, those hair-pounding 1-2 swings in minutes, opportunities dry up, turning trades risky as slippage its profits. Liquid pairs like Bitcoin or Ethereum ensure tight spreads, unlike illiquid altcoins, where a single whale can spike prices unpredictable. So the advantage here is that you know almost instantly if a trade works. If Bitcoin breaks a level and surge, you're in profit. If it reverses, exit with a tiny loss. No agonizing over hoping it turns around. Everything quick. Let me share with you an anecdote. Early in my trading journey, I shadowed a crypto scalper during the 2023 altcoin season that he targets sold during a high wave, entering a long at 150 on a quick dip, exiting at 150.75, just 8 minutes later for a 0.5 gain. It's addictive, he confessed, like video gaming with real money. But he warned of burnout. The focus required on scalping is intense, like a surgeon mid-operation. So be careful. But wait a little bit. Before you even think about clicking the buy or sell button in the crypto markets, 3 critical boxes must be checked. Treat them like a pre-flight checklist for a rocket launch into volatility. Ignoring them is like jumping into a shark-infested pool without checking the water. It's a recipe for disaster. In the world of crypto scalping, where every second counts, these conditions ensure you're trading with the wind at your back, not against the storm. Historically, this disciplined approach mirrors the strategies of the 1980s. Floor traders who waited for market open post-major news, avoiding the pitfalls that claimed many during Black Monday in 1987. In crypto, for example, during the 2020 COVID crash, scalpers who headed similar rules profited from bounces while others panicked. So let's go with scalping. First, the time of the day. The golden window for crypto scalping is from 1:30 UTC to 3 UTC, aligning with the New York stock market open, that's 9:30 to 11 AM, aligning with the New York stock market open. Why? The reason is easy. This period unleashes a torrent of liquidity as US traders flood in, overlapping with London sessions for maximum volume. Crypto, though 24/7, syncs with traditional markets. Bitcoin often explodes here on Wall Street sentiment. Vividly, envision the charts igniting, candles stretch like rubber bands. Volume bars tower like scalpers. Why? This period unleashes a torrent of liquidity as US traders flood in, overlapping with London sessions for maximum volume. Crypto through 24/7 syncs with traditional finance, and Bitcoin often explodes here on Wall Street sentiment. Second, news catalysts are your volatility fuel. Scout for economic bombshells like CPI releases, FOMC rate decisions, major crypto headlines like, for example, ETF approvals or exchange earnings. These inject adrenaline into the market, spiking volume and creating clean moves. Without them, prices meander like a lazy river, unsuitable for scalping rapid dips. Just take a look when Bitcoin ETF approval was done. Everything went up, the volatility surged a lot, and this is a perfect playground for scalpers. Trading conditions are non-negotiable. You need a clear microtrend, upward momentum with higher highs or downward with lower lows. Avoid choppy ranges or sideways consolidations. That's where scalpers bleed out, trapped in endless fake breaks. In trending markets, price respect levels like a disciplined soldier, offering predictable entries. For example, Bitcoin during the 2025 rally to 100k, upward trends allowed longs on pullbacks. In bear phases, shorts dominated. Combining this, your pre-trade ritual becomes sacred. Check this time. Is it New York Open? News, any catalyst today, trend up, down or nowhere, only when all align do you proceed. Now let me explain with you the first candle rule. The unsung hero of scalping that separates amateurs from pros in the crypto arena. Why is it initial 15-minute candle open after the New York Open so pivotal? It acts as the market's opening monologue, revealing intentions amid the initial frenzy. Historically, this concept evolved from stock market opens in the 1930s, where traders wait post-bell to gauge sentiment, avoid the chaos that doomed many during the Great Depression. So avoid trading in those first 0 to 15 minutes at all cost. The open is a whirlwind, algorithms clash, retail floods, and fakeouts abound like mirages in a desert. Enter too early and you're fucked out. Buying a spike that reverses or selling into a trap button. Enter too early and you're fucked out. Buying a spike that reverses or selling a trap bottom. Instead, wait for the candle close at 145 UTC, then markets high and low, like PDH, PDL I told you in the previous video, and this becomes your opening range, a fortress defining the session battleground. The benefit is clear. It filters noise, dodging the emotional roller coaster of early volatility, avoids fakeouts by demanding confirmation, and lets the market show its hand, exposing the true direction. So first of all, let me explain you the first candle rule, the unsung hero of scalping that separates amateurs from pros in the crypto arena. Why is the initial 15-minute candle after the New York Open? First of all, you have to keep in mind that the New York Open is 1:30 UTC and the first 15-minute candle is from 1:30 to 1:45. It acts as the market's opening monologue, revealing all the intentions of today's session. And you know what? You should definitely avoid trading in those first 15 minutes at all cost. The open is a whirlwind of algorithms clash, retail floods in, and fakeouts abound like mirages in the desert. Enter too early and you're fucked out buying a spike that reverses or selling into a trap bottom instead of waiting for the candle to close at 1:45 UTC. Then markets high and low as I shown you in previous videos of the PDH and PDL, and this becomes your opening range, a fortress defining the session battleground. Benefits: it filters the noise, dodging the emotional roller coaster of early volatility and avoids fake outs by demanding confirmation, and lets the market show its hand, exposing true direction. Let's make a step-by-step tutorial. For example, it's 1:45 UTC on your 15-minute chart. Draw lines at the candle's high and candle's low. That's your range. Now observe how prices interacts, breaks above the signal, bulls in charge. Below, for beers. Now let me unlock for you that multi-time frame strategy, the precision engine driving your crypto scalps to profitability. This approach layers time frames like a master chef building flavors. The 15-minute defines the big picture, the 5-minute confirms momentum, and the 1-minute fine-tunes entries for like a scalpel. In crypto's relentless pace, this synergy cuts through noise, aligning short bursts with broader trends. And again, let me show you the step-by-step process. Start by waiting for the 15-minute candle post New York Open to form markets high and low as the opening range. This is your foundation, revealing session bias. Switch to the 5-minute chart and wait for the full candle close above bullish or below bearish, the range. Ignore wicks or partial breaks. They are deceptive sirens luring you to losses. A full close signals conviction, like a green light flashing go. Once this is confirmed, dive to the 1-minute chart for refined entries. Hand structure breaks, order blocks, clean retest, or momentum continuations. Then make sure you set up your risk and reward session, and then be careful with your risk reward. Place stops just outside the candle structure, tight like $50 on a 10K account for 0.5 risk, and target aim for 1-2 risk reward. Say risking 0.2 to gain 0.4. And optionally, you can take half at 1-1, trail the rest with a moving average. If invalidated quickly, exit, no mercy. Now let's go with risk management and profitability math. Dispelling the big myth, you don't need an 80% win rate to crush it in the crypto scalping method. Far from it, really bites a 40 to 50% win rate can yield massive profits if your risk reward skews at least 1-2. This math is the backbone, turning average traders into consistent winners. The goal here is not perfection, but favorable asymmetry. For every dollar risk, aim to gain 2 or more. With a 50% win rate, you'd break even on a 1-1 error, but 1-2 turns it profitable. And this might seem simple, but it's one of the things that amateur traders don't even know. Everything about risk management, it's so important if you wanna take it seriously. If you wanna trade seriously, you definitely need to know how to manage risk and how to not blow your account. And finally, I'll share with you some pro tips, insider secrets to elevate your crypto scalping from good to elite, ensuring longevity in this brutal game. Limit to 1, 2, or 3 trades per day. Anything over 5 screams over trading, inviting fatigue and errors. And this is so important for you, quality over quantity. Wait for pristine setups like a predator stalking pre. Overtrading doomed 1990 day traders in crypto. It amplified losses during the 2022 FTX collapse. If it doesn't work, quickly exit. Scalps thrive on immediacy. Lingering trades morph into day halts, exposed to reversals. Then take profits at key levels. Don't grid out. Lock gains at fib extensions or round numbers. For example, $69K on Bitcoin if entered at 68,500. Move stop to break even after first target, turning risk for free. So this is everything I wanted to share with you in this video. You already know this strategy. It's solid, mechanical, and repeatable. But what about you? It's not the entries or indicators that blow up accounts. It's fear, greed, hesitation sneaking in like thieves in the night. I've seen it over and over again. Traders with killer systems still crash and burn because their mindset isn't geared for the long game. I showed you the scalping strategy that makes me consistent profits, but here's the truth. No strategy will save you if your psychology is broken. Most traders don't lose because their system fails, they lose because they do. If you ever hesitated, panicked, or blown your account after a string of losses that it's not a technical issue, it's a mental one. That's why I created two things in a full video where I'll break down everything I've learned about trading psychology over 6 years. That's why I created two things. One, a full video where I'll break down everything I learned about trading psychology over 6 years. Watch it before you place your next trade. It could be the most important video you'll ever see and also my favorite one. And finally, if you're new or even amateur or you're actually trading, let's make it even better for you. Right in the description below, I've hooked you up with my full trading course for free. Yeah, you heard it right. My complete step-by-step course that covers everything from beginner setups to advanced risk management, all yours at any cost. All you need to do is register in Bluffing, the sponsor of this video, my go-to exchange for seamless crypto trading. Just register, deposit just $100 and boom, the course unlocks instantly. You just have to go to the Telegram channel I'm leaving you in the description. You put your Bluffing UID and it will automatically verify that you followed those steps, and you will be directly joined into this group chat with me where I'll be sharing with you my trading crypto course for free in a PDF, and also I'll be sharing with you news, trading sessions, trades, everything about trading, about crypto. So I think it's worth it. Then also you can jump right in and test these strategies I'll be sharing with you live on Bluffing's platform with their low fees, high leverage and rock solid security. It's a no-brainer way to level up without risking a dime extra. Click the link now, grab your free course and let's turn you into a trading machine. Your future self will thank you. Subscribe, hit that bell and let's dominate the markets together. Thank you so much, I'm Joe and see you in the next video.